Welcome to the Capital Spreads Weekly Update. Today is Monday the 5th of November 2012. We've had a slightly negative start to the week so far. European indices in the red, FTSE around 5840, Dow 13,070. That risk aversion has led to a bit of downward momentum for the euro as well. Euro dollar at 128.00. Cable 159.75, gold at 16.77, and Brent suffering a little bit as well at 105.70. The week has started off badly purely because on Friday we had some very good non-farm payroll figures, but actually it saw a bout of risk aversion. Initially the futures did rally, but the rally didn't last long at all. It was reversed, and I think that going into the electoral weekend, and with tomorrow the big risk event of this week, the US elections, of course, I think there was a little bit of short covering, uncertainty around the result. At the moment, polls show neck and neck. So whilst there are reports that Obama might be just ahead in some of the key swing states, the overall sort of consensus is that it's going to be a very, very closely fought election. So that seems to have caused a bit of risk aversion in the markets, and we're seeing that today in European trade. FTSE down quite a few points. So we've already seen today from the UK services PMI survey was very disappointing, actually. It just landed above the 50 mark, suggesting expansion for the services sector in the UK, but far below expectations. The market was hoping for a figure of about 52.2, came in at 50.6. We also get the US non-manufacturing data. That's expected to come in at 54.5 this afternoon. Then tomorrow we get PMI services from Europe. That's expected to remain very much below the 50 mark, but to stay steady at 46.2. There's also UK industrial production numbers. They're expected to decline tomorrow, and industrial orders from Germany expected to decline as well. Then on Wednesday we get EU retail sales. That's expected to decline. In fact, it's rather a theme of the week. European economic data that's due out this week is meant to be rather poor, and that's probably also sort of being reflected in this slightly bearish move today from the markets. So as mentioned, Wednesday, European retail sales, of course, record high unemployment in the Eurozone, not helping retail sales there. We also get German industrial production, and that is expected to decline. Of course, the manufacturing data, the PMIs in Germany are below 50, so things looking quite bearish there as well. Then on Thursday we get trade balances from the UK and Germany, as well as the central bank meetings. So the Bank of England, the question there, of course, is, are we going to see more quantitative easing? The consensus in the run-up to November had been that the Bank of England would certainly extend its asset buying programme this month, but with the very good GDP figures a few weeks ago, then really expectations have been reined in. So we're probably not going to see any action this week, at least that's the consensus. From the ECB, it's all about whether they'll cut interest rates further. The consensus really, again, is that they won't do it this time round. It will be very much sort of a focus on what they're going to say about Greece, what they're going to say about Spain, whether they expect possibly to take any write-downs of their exposure to Greece, highly unlikely, and whether they are going to mention anything about the bond buying programme for Spain. So lots to focus on there on Thursday. And of course we get the weekly initial jobless claims as well from the US. Then Friday, to finish us off, we get some numbers from China, so they'll be interesting to watch. Get retail sales, CPI, industrial production. That could affect sentiment towards the end of the week. And we also get US Michigan confidence. But as touched on earlier, there's a lot of economic data this week, But the main risk event, of course, is the US elections. They're going to close the polls tomorrow. We should expect a result early on Wednesday. That is, of course, if we don't see a sort of repeat of that election in the early noughties between George Bush and Al Gore, where it took it took weeks before the actual president was finally announced. If it's that close and that sort of uncertainty happens again, then that could unsettle markets further. But that's it. As ever, do give us feedback. media@capitalspreads.com.